Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about one of my favorite sectors, which is 3D printing. So 3D printing is a really emerging market, and according to the Grand View research, um, it's expected to grow around 14% compounded annual growth from 2020 to 2027. And there is aggressive R&D going on in this space, and especially the sectors like healthcare, automotive, aerospace, and defense. They are really consuming, this 3D printing technology very nicely. And as you can see here are some pictures, a quick prototype from Proto Labs, which is a really nice company in this market, and also a prototype from Desktop Metal, which is again a good company, relatively new company. So with that, let's dive into my top companies in this space and take it from there. So as you can see here, there are, these are the key companies in this space, and my favorites are XONE, Materialise, voxeljet, Desktop Metal, Proto Labs, Autodesk, and HP. And let's now go into some numbers and see why they make sense. And from a number perspective, as we can see here, X1 is one of my favorite companies. Price is a little bit low. Stock price is $37. Market cap is again low market cap, a lot of room to grow. And they have solid 1 year performance, and revenue growth is very good, as you can see here. And they got a relatively okay gross margin. With the revenue growth and good gross margin, that's why it's a good candidate. Next is Materialise NV. It's about $2.19 billion company, and their revenue growth is a little bit negative, but they got very good gross margin. Next is voxeljet, about $18 stock price, and very low market cap, as you can see here. And they got positive revenue growth and good gross margin. Next is Desktop Metal DM. It's a relatively new company, has got a very good venture backing, and about $4.63 billion company, a relatively low stock price, and year-over-year revenue growth is a little bit negative, and right now it's a new company, so nothing to show from a gross margin perspective. And next is Proto Labs, very good company, pioneer in this space. It's really best of breed type company. 142.35 stock price, and market cap is about 4.05 billion. Very good performance and a little bit negative revenue growth, but nice gross margin. Next is Autodesk. Autodesk does a lot of things, including the design, CAD, CAM, multiple things. Stock price around 272, and market cap is very respectable here, and very good performance, and even good positive growth margin, and extremely high gross margin because it's a SaaS company. They're into recurring revenue stream. Last but not least is HP. HP is $29 stock price, bigger market cap, positive revenue growth and positive gross margin. And while ago, this company was not doing well, and Xerox was trying to acquire them, but those days are well gone. And now HP is getting its footing back in the market. So with that, let's look at the profile of these companies and see why they make sense. So X1 is relatively smaller company, around $770 million market cap. CEO is John Hartner. These guys are into development, manufacturing, marketing of 3D printing machines, and the machine goes into aerospace, automotive, energy, multiple industries. And as you can see here from a stock price, they are doing pretty nicely from a stock chart. They did not do well for a long time, but now they got their footing back, doing really nicely. And they have good amount of cash and some debt, which is really manageable. And as you can see here, market cap is growing pretty nicely. They're a little bit bump here, but now they're going very nicely. And from 232 in September, now they're into 770 million, which is very nice. And from a revenue perspective, they've been doing pretty okay, a little bit up and down as you can see here, but now they're doing well. And they've been surprising Wall Street with the revenue surprise most of the times. Exception is 1231, and they got positive gross margin and negative net margin. Company is still not making money, which is understandable because they're investing in their own product. Next is 3D Systems. 3D Systems is not my favorite, mainly because of the inconsistency in the earnings, as you can see here. About $3.41 billion company. CEO is Jeffrey Graves and $27 stock price. As you can see stock chart here, it's not doing that well, up and down a little bit, and they went up along with all the 3D printing stocks. Now they're coming down pretty hard. And from market cap perspective, it's a little bit up and down story. They were up, then they went down, still down, now they're up. So, and revenue perspective, it's a negative revenue growth, as you can see here. And they had a lot of revenue here, went down a little bit, went further down. Now they're getting their footing back again. And from an EPS perspective and even revenue perspective, negative surprises couple times, which is Wall Street does not like this negative surprise. And they got good gross margin, but I like gross margin along with the revenue growth. But here we have gross margin, meaning they are streamlining their bottom line and the expenses and the operations. But I like to see the top line growing, which is this revenue growth. And net margin is negative, which is they're still not making money, mainly because they're investing in their own company. And one thing I caution a little bit is this heavy debt load, 22.45 billion debt. It's really high for the company, so that's one thing I would watch out for. Next is Materialise. It's a company from Belgium and $2 billion company. They're into 3D printing. They do multiple things around manufacturing and whatnot. And stock price is pretty nicely. This is a good chart, as you can see here, steadily going up. Now they went down with all the 3D printing stocks, but nice chart. It's got nice growth to it, and they got good amount of cash and some debt which is manageable. And stock price itself is kind of continuously growing, as you can see here, 1.96 now to kind of steady eddy type stock, market cap growth. And from a revenue perspective, these guys are a little bit into negative revenue growth, as you can see here. Which is they try to improve, but it's still negative 15. And these guys are also surprising a little bit negatively to the market. 3 times revenue, negative revenue surprise, and 1 time positive earning surprise, which is inconsistency, as you can see here. That's one thing Wall Street does not like too much, but at least they're growing the market cap, which is good. And respectable gross margin is in 50s, which is better than both of the other companies here, XONE as well as 3D. And they're still not making money. There is a chance they can make money because they're negative 0.75%. They can make money as you go forward. So this is a good company. I would think this will do well, even though they had some negative surprises. Overall, they seem to be managing the company well. Next, let's look at voxeljet. It's a smaller market cap company, as you can see here, 86.68 million. Company based in Germany. They're into 3D printing, and they focus on production. And stock price, the chart itself is up and down, as you can see here. Now they're kind of started going up last year, and now they're a little bit into down with all the other 3D printing stocks. And low stock price and market cap itself is relatively I would say up and down for most part. Now they're going up, as you can see here. And from a revenue itself, it's up and down a little bit, and revenue growth itself is up, then down, then now they're trending up again. And they got good gross margin, and right now negative net margin, meaning they're still not making money. This is a company I would watch out because it's a really low market cap, and stock price is also low. You could buy a little bit and keep. One thing I would caution is really the debt load itself. It's a little bit high. That's one thing I would watch out for. Next is Stratasys. Stratasys is about a $1.52 billion company. It's one of the early pioneer in this space, but the company, as you can see from the chart, is not doing that great from a chart perspective. They got a good amount of cash and some debt, and from a market cap perspective, they've been a little bit up and down, as you can see here, all over the map. And the revenue growth itself is negative. They've been surprising Wall Street with positive and some negative surprises. Gross margin is good, but net margin is negative. So I would, wait on this stock. I would not, I would not suggest to buy this stock, mainly because chart is not that great. They got some negative surprises, and still year-over-year revenue growth is negative. So those are the reasons. I would wait for this stock. I would not buy right now. Next is Desktop Metal DM. This is a relatively new company, and they're into 3D printing, and they do multiple things. And as you can see here, stock chart is, they kind of caught fire sometimes last year. And this company is founded, late 2015 by a bunch of MIT professors, well respected in the industry, and venture capital firm that backed Google and Amazon also backed this company here. And it's secured global distribution network over 80 partners. These are all positive things for this company. There is no earnings history to show because it's a relatively new company. That's why I would give this company a chance. Relatively new company, and high market cap, meaning Wall Street likes this company now, so I would give this a chance. And let's look at last three companies. These are bigger market cap companies. First two are really well respected in this industry. Let's first look at Proto Labs. Proto Labs is a best of breed company in this space. They're really pioneers. They're really doing nicely, and these guys are into 3D printing. They help a lot of these companies to do fast prototype. They can mail the prototype quickly, and make sure your operations can really prototype the 3D the actual prototypes. So with that 91% approved CEO, this is a very nice number here. Respectable approval rating from their own employees, and stock price is 139. And chart itself, as you can see, a pretty nice looking chart. They've been doing well since last year. For most part, they've been doing relatively nicely. And from a market cap perspective, pretty steady Eddie, I would say. 2.3, 3.0, 3.46. They've been improving the market cap, with the exception of now, because of this downturn, they came a little bit down. Understandable. From a revenue itself, they've been negative on the revenue growth, but single digits, not double digits like some of the other companies that we saw. And they've been surprising Wall Street with positive revenue surprise, positive EPS. This is something, the predictability is something Wall Street likes it. This company is giving that predictability. That's why Wall Street likes this company. And good positive gross margin in the 50s, and they're making money. Net margin is positive. I like this company. I would buy this on any weakness and pull back and keep it for the long term. Next is Autodesk. Autodesk does a lot of things, and this is not just a 3D printing company, and they do AutoCAD, Civil 3D, multiple things. It's also a recurring revenue SaaS company. That's why these guys have heavy very high gross margin. Bigger company, $59.22 billion market cap, 96% approved CEO Andrew, and stock price around 269. Very nice looking chart. Some pullbacks, all these pullbacks are nice buying opportunity. Even now there is a pullback, I would buy this company. From a market cap perspective, nice acceleration, steady eddy type. um, some bumps, but it's a really steady acceleration, and nice revenue growth, positive revenue growth. And they've been surprising Wall Street with a positive revenue surprise, positive EPS surprise. That's one thing Wall Street loves. Wall Street loves predictability. This company is giving it to them. And very nice gross margin, 91%, which is very respectable given this is a SaaS company. And they got positive net margin. Company is making money, which is a good thing. So I would recommend Autodesk for investors, which is a good company. Next is HP Inc., HPQ, about $37 billion company. HP has got a lot of things. They have computers, they got printers, they got 3D printing. It's a bigger company that way. And it's a US based company, not China. Stock price around $29, and the company is up and down, as you can see here. Now they're doing nicely, going up. And from a market cap perspective, it's really kind of steadily going up overall, which is a good thing. And from a revenue perspective, it's a little bit negative revenue growth, but not double digit. It's hardly negative. And they've been surprising Wall Street with a positive revenue and EPS surprise, with the exception of 430 back in April. And gross margin is positive, net margin is also positive. Company is making money. I would have liked gross margin to be a little bit higher, but nonetheless, this is okay company. Not in the same league as Proto Labs and Autodesk, but it's okay. On the pullbacks. So with that, let's look at performance of these companies and see how they have done in the past year or so. So if you look at XONE here, a little bit $37 company, lower market cap. And this company, for most part, whenever they went down, they always pulled themselves back up. So that's one of the reasons I like the company. Smaller company, small share price, but they always bounced back from the pullbacks. 3D systems, I talked about inconsistency. This is one thing, a little bit inconsistent. That's why I would watch out to buy this stock. Right now, it's went up so much. I would wait a little bit because of their heavy debt load. I would wait a little bit. Next is MTLS. This is whenever company stock price comes down, they bounce back. Now it looks like a good buying opportunity here because they went down both March right now and February. VJET, again a good company. They've done well. Even though they lost 42% here, they always bounced back. I think it's a good company. Lower stock price, lower market cap. Stratasys is a little bit inconsistent, even though they're an early pioneer, a little bit inconsistent. If you want to buy, I would buy it on weakness. This could be a good opportunity now, but don't buy at high price. Whenever it pulls back, you could buy, but not my favorite. Next one is Desktop Metal, pretty steady eddy type company, newer company, lot of market backing here, venture capital backing. I would love to buy this company. And next to Proto Lab and Autodesk, both are my favorites. I would buy these companies on any pullback. Next is HP. HP is one of the slow growing type companies. Off late they've been doing very well. I would love their gross margin to be a little bit higher. With that, let's look at weekly, monthly, quarterly type performance here. XONE, nice yearly performance, as you can see here, 479, and they've been doing very well on a half year, quarterly, monthly. This week they came down with all the stocks. So that's why if you see here on a performance basis, this clearly is a good company, and even though it's a lower market cap. Materialize, it's a they're struggling a little bit, as you can see here. 1 year performance is good, but as you can go into quarter, month, week, they're a little bit struggling here. But I would buy them on any pullback, which could be a good one right now. And same story, the voxeljet, Germany based company, and good 1 year performance, but they've been this week itself a little bit hard on them, so I would buy this on weakness. And desktop metal, same story here. 1 year performance is great, but as you go into monthly and weekly, they're a little bit struggling now with the latest sell off going on. Proto Labs and Autodesk, and both are my favorites. I would buy them on any pullback. These guys are also a little bit struggling, especially Proto Lab. Last month and this week, I would buy this on weakness. And HP is pretty steady Eddie, as you can see here. I would buy a little bit. Don't expect too much growth, but it's steady Eddie type stock. I would love the gross margin to grow a little more, but nonetheless, good company. So with that, I would recommend buying these bolded companies here. But my favorites are really Protolab, Autodesk, but other companies like Desktop Metal, voxeljet, Materialise, XONE are also okay. So with that, happy investing. Thank you very much.